Did you know that it's possible to use a Roth IRA to pay for college? You may be familiar with the Roth IRA and the usage of it for retirement purposes, but you can also use it to pay for college. The IRS allows a penalty-free withdrawal if you are paying for you, your spouse, your spouses or your children, or your spouses or your grandchildren when paying for higher education. But the question is it the right idea to do or not? Today, we're going to cover the 5 reasons why you should not use a Roth IRA to pay for college. The Roth IRA is an individual retirement account that is funded with after-tax dollars. Those dollars grow tax-deferred, and assuming you meet certain criteria, you can take them out completely tax-free. When it comes to a retirement account and the tax benefits, very few are going to beat the tax benefits that are offered by a Roth IRA. It's not right for everybody, and there are contribution limits and some other factors that go into this, as well as income limits that you must meet. More often than not, a winning tax strategy and retirement strategy includes a Roth IRA. First, let's cover some of the benefits of a Roth IRA when it comes to paying for college. But when it comes to education and higher education expenses, can you use a Roth IRA? The answer is yes. Now, some of the benefits that you are going to notice when using a Roth IRA, as I mentioned before, the IRS allows you to take out a distribution that is considered penalty-free if you're using this for a qualified education expense. So normally, if you take out an early distribution from a Roth IRA, you'd be levied on any interest that is earned is considered taxable income and an additional 10% penalty. However, if that distribution is used for a qualifying education expense such as tuition, fees, room and board, equipment, or books, you are not going to be subject to that 10% penalty. So it could make sense for some individuals who have saved money in a Roth IRA. Another positive of using a Roth IRA to fund education is that it's considered a protected asset when filling out the free application for federal student aid, which is the form that you need to fill out in order to qualify for any type of federal aid if going to college. The IRS allows you to make these contributions to it after tax, and it's sheltered inside this retirement account. So the Department of Education, when they release the FAFSA, does not ask for any amounts in which would be saved inside of a Roth IRA. Therefore, if you have a sizable balance inside a Roth IRA, it is not considered for financial aid purposes on the free application for federal student aid. What that means is that you are eligible for more need-based aid simply on that fact. If you have assets outside of a Roth IRA, such as in a savings account, in a brokerage account, or in a 529 plan, those assets are often considered by the Department of Education on the free application for federal student aid. So the more that you have inside of those asset classes, the less likely you are to receive any type of need-based financial aid. One of the other benefits of using a Roth IRA is that if you don't use it for college, you can use it for other purposes. Again, it stands for Roth Individual Retirement Account. It is best served for retirement. So in the event you're able to get through the higher education expenses without using a Roth IRA, it can benefit you greatly down the road as you approach retirement. That being said, let's cover the reasons why you shouldn't use a Roth IRA to pay for college. Number 1 is there are unclear tax benefits if you were to use these. When you contribute to a Roth IRA, those contributions are made with after-tax dollars. So therefore, you can take out your contributions at any time, penalty-free and income tax-free. However, the growth on those dollars is a different story. If you were to take out those dollars for higher education expenses, the growth inside the account, those dollars would not be subject to the penalty as we previously mentioned. However, they would be subject to taxable income. Therefore, the growth of the funds that you would see, it defeats the purpose of investing in a Roth IRA, because if you use them for retirement purposes and you're over the age of 59 and a half and you meet all other necessary and eligible criteria, you can then use the Roth IRA as tax-free income. However, if you're using it to pay for college, the growth inside the account would be taxable as income. So there's not a clear tax benefit to using any of the growth within the Roth IRA. One of the positives that we mentioned of using a Roth IRA is that the asset does not count on the financial forms, specifically the free application for federal student aid. However, any income that would be taken from the IRA or a withdrawal that would be taken would be considered untaxed income to the student. And that could mess with the federal aid that the student would be eligible for in other circumstances. So if you're withdrawing from an IRA while you're in school, it may not make sense if you're already using some of the need-based aid. On that point, if the Roth IRA is in the child's name and they are taking money from the accounts, it's assessed as student income, which hurts the chances of getting any type of other need-based aid even more. If a child is making any type of income or is receiving any income from a source such as a Roth IRA, the FAFSA and the other form, the CSS profile, would punish that child even more in terms of the need-based aid that they'd be eligible for. Therefore, if you're going to be taking money from a Roth IRA to pay for school, you want to make sure you're very strategic about how you go about this. One of the other downsides to using a Roth IRA to pay for schooling is that there are contribution limits. That's both for a student IRA and also a parent IRA. So the question becomes, if you're going to be saving a lot of money towards schooling, is the Roth IRA the best place to be saving towards school? $6,500 is the current amount that you're allowed to put in tax year 2023 if you're under the age of 50. Therefore, that $6,500 is almost assuredly not going to cover the full boat when it comes to paying for schooling. It can help cover some of the schooling, but it won't be able to cover the full amount. You also don't get any type of tax break on the $6,500 that you put in. There's no type of credit that you can take or tax deduction that you can take. The $6,500 is funded with after-tax dollars. One of the biggest reasons that I think you should not be using a Roth IRA to pay for schooling is the lost opportunity cost that it can create for college. To me, one of the main benefits that you have within a Roth is the tax deferral and the tax-free distributions that you can take in retirement. Therefore, the longer you let this grow, the more beneficial it will be to you, specifically in retirement. Let's look at an example. If I had $20,000 that was sitting in a Roth IRA, and I let that sit for 20 years, over time, that would grow to over $64,000. That's over $44,000 of gain that I'd be able to get within that IRA. And the best part is it's tax-free. If I use those funds today, that's $20,000 that can go towards school. But again, the growth would be taxable if I were to be paying that towards school. Any of the contributions that I make would not be taxable, but any of the growth is. If I let that sit and accumulate over a 20-year time period, that growth is completely tax-free. Again, I think that's one of the main benefits of keeping the Roth IRA for retirement is the time that you're able to spend, the tax deferral that you're able to take advantage of, and the tax-free distributions. Finally, I think there are better alternatives that you can use when it comes to saving and paying for college. The one that comes to mind immediately is the 529 plan. Now, the 529 plan isn't perfect, and we're going to cover some of those benefits and drawbacks in another video. But when you compare it to the Roth IRA, it's definitely a more favorable vehicle when it comes to paying for college. While the Roth IRA can offer some benefits when paying for college, in my opinion, the benefits are outweighed by the costs. As always, this is not considered to be individual advice or an individual recommendation. This is general in nature, and this is not to be taken as specific advice, but educational in value. If you have specific questions for your IRA or your 529 plan or your financial plan in general, you should speak to your financial planner and your accountant. Thanks for taking the time. I hope this was beneficial. If you found it to be beneficial, please feel free to like this page, please share it, and please subscribe to my channel for more information on how to best pay for college.